All right, roundtable. Yesterday we talked about the Canadian dollar being a currency pair I was looking for buying positions. Sorry, I always have problems when I'm trading and trying to record at the same time. So if you remember, 170 and then down to 150, like anywhere in this area, is where I was targeting buys. And so going to our swing trade system for daily and hourly bars, remember we're looking for 3 down closes. We want to see the red dots away from the lows. We want to see these blue dots touching or below the highs. You can see that there's one bar here in the middle where the blue dot is not touching the high. I'm willing to take that. Remember, what we're looking for is momentum to the downside, and we could get in here with a lot of different technical numbers and say, oh well, it's got to be 2/3 of the bar length away from the that business just leads to a lot of headaches. Remember, what we're looking for is a confirmation, if you will, of momentum. And so we got our first signal here, and then in our buy zone we got the reversal of momentum that we're looking for. Remember, the reversal is where we go from the red dots being away from the low, the blue dots being below the high, to the opposite, right? The red dot now is above the low, and the blue dot is above the high. So a couple hours ago, there was our trigger to buy. Now let's talk about entries here. The aggressive entry, of course, is as soon as this bar closes, meaning this bar here, we get the signal in the buy zone, we get the flip in momentum, we have a very, very small stop relative to the profit target. The entry right there at the close if you're feeling aggressive. If you're waiting for confirmation, you can use the insider code methods, meaning going down to the 15-minute bar, or you can wait for the next hourly close. When the market is really active, though, what you'll see is, as a conservative trader, you simply get less trades because the market's going to really take off on you really, really fast. That's not a good thing, it's not a bad thing, that's just the way that it goes. So either this time, fortunately, both the aggressive and the conservative trader had an opportunity to get in. The market gave us like a third opportunity to get in with this little wick here. You can see the market pushing down. Stops, of course, go below the low here. Also, conservative traders, generally speaking, are going to have a slightly larger stop. Now, with the Canadian dollar pushing up here, remember our first target, especially for our short-term or day trades, is here at the middle line. Second target is up here at our dynamic RS top. So at this point, we've reached the first target. So at least the very first part of the position needs to be off, with the rest going to break even, or a trailing stop much closer. The idea here is we don't want to exit a profitable trade at a loss. There's just simply no reason to do it. So I don't mean break even as in we only move our stop up a little bit. I mean when I say break even, I place my stop either at my entry price or my entry price plus a couple of ticks to account for slippage and the spread and other things. So Canadian dollar still at this point moving up. We're a little bit after the New York Open. I'm getting 9:25 Eastern. Wait, what time is it? Let me check. Oh, pause. Yeah, so 10:25 Eastern time, well within the sweet spot. So we could have some more momentum coming up here. You can see down on the relative strength, we've got the US dollar about even with the Canadian dollar. I had to restart my computer a couple of times, so Hercules is not giving me any help. It's just a lot of gobbledygook at this point because it hasn't been running long enough. Just barely, though. We only need about 20 minutes. So the graph isn't telling me much, but I do know that the numbers are accurate. And so let me mark off all of these. We've got, there we go. So 5 and 4, like I said, very close. US is looking like it's jumping up. The history for today I've got it loaded up for the US and the Canadian. You can see the US has just generally been strong overall for the day. So go back to the currency pair. All of that said and done, that's simply giving me a way to look at the overall currency market to confirm the momentum, because my hopeful and wishful thinking is going to want this to continue going up. Also on the matrix down here, remember we talked about this Friday as well. Well, no, I guess we didn't talk about it Monday. We talked about this on Friday. The way I monitor the matrix is like this. Remember, we start with the time frame that we're on, and we start 2 time frames down, right? So if I'm looking at the hourly bars here, then where I want to monitor is here at the 15-minute. And again, I want to see that at least 3 of the 5 are buys with the green up arrow. You can see we've got one that's turning neutral and one that's actually in sell mode so far, so we're still good. But as soon as I get one more of these switching over, which of course on the 15-minute, that's going to update every 15 minutes. Once I get another one switching over, so I no longer have 3, that's another indication for me to look at the market and see if price is trading near a prior high. Now I can see price spiked up to a prior high. What that tells me is sellers are here, sellers are here. So if price backs away and can't continue moving up, then that simply means that sellers are coming back in the market. Remember, the essence of trading is not reinventing the wheel or trying to come up with some crazy computer program that somehow predicts the market. It's understanding how support and resistance actually work, understanding what actually creates support and resistance, and then combining our tools with that support and resistance. So if the market is telling us that sellers are living here, sellers are living here, we have to assume until the pattern is broken that sellers are going to continue living there. Now, of course, we can draw lines and predict and say, oh, look, we connect the highs and the sellers came right to that point, and wave our arms and say, hallelujah, we have a way to predict the market. But we just don't know until the bar is closed. In other words, we're not going to be able to confirm that sellers are in the market until this bad boy actually moves down below this low. So this move is still bullish until we break through this low, but again, I'm assuming that because prices moved down out of this area here, that sellers are living there, which is why, again, I want to combine my tools with the way the market's acting.